So let's run through it. As always, do go underneath if you want to learn how to do this. It's easy to do once you've got the rules, you've got the understanding, and it's probably the safest way, I would say, really, to trade overall. So I'm going to take a 0.2 short here, and we'll just see where we get with that. If we keep rallying away, I will add again, I think. I'm just going to have a look where we are market-wise. Okay, so a lot of key resistance up here. I'm going to add again. So something light in there. Well, a bit heavier, but nothing major. Like I say, I'm always doing these in low-risk format, so people who don't have 6 figures to trade with can still catch on. There's no point in me sitting here taking massive entries, make thousands of dollars at a time if you don't have the capital to do it. I would say in the simplest terms, anything I show you now is scalable exactly. I mean, if I end up having a max 2K drawdown here, there's no reason why you couldn't have had higher sizes in that particular point. You just have to make sure it's always relative to your available capital. And of course, that comes with in-depth risk rules. So we've got a decent pullback here. We've come off the top reasonably far. I'm going to add another 0.15. And if we can push up, I'll probably look to kill that off and start the process of hedging these out. So this is going to be a good example, because if I add another 0.15, okay, I've now got various pieces of exposure in, okay, to the long side, and I can start the process of hedging out. So if I take $40 there, I can hedge off 0.05. Okay, so I'll play that through, and we'll see where we get. So still not really got much there. Okay, and I can add 2 more there. So now I've got 0.15 in compared to that current exposure above. I'm going to add another one because we're looking a bit resistive. Now I can kill off that long for about $50 loss. Now I can add 2 more, or 3 more. I can take the opportunity to remove that one. I'll tell you why in a sec. Okay, so big fall there. That's going to be essentially hedge money back on what we just had. Okay, and what we just took as a loss. And the reason why I removed it, like I said, is because it looks like you're starting to get the market turn. Now, if that long is going to be stuck up here, that means when the market, if the market, I should say rather, comes down here, we're going to be sitting with this long. So I would rather take the chance of removing it because my drawdown was low to begin with, and I knew, I could take protective measures like hedging, etc. So I'll take a couple of those longs off, and I'm still hedged more so to the short side, but I'm going to add a couple of longs there as well. I'm going to sprinkle another long there. So big fall here is going to give me the chance to kill off some of those shorts. And again, if I'd kept that long up there, it would now be much further underwater. So it's important, if you're going to be hedging, you always need to take the opportunity to remove things that are likely to drift and be, more and more wrong over time. Because if you do that, you save yourself a massive headache in many cases. So I've removed all of that. I'll add another light long just because this level looks a bit crap. And if we keep going further, I can hedge. I can add 3 more here. And I would have liked to kill that, but I didn't get the chance. I've got to play this slower, I think. I'm just trying to get through as many moves as I can. Tell you what, we'll go on the daily. So big push up would be great. There we go. $63, $63, $63, $3.46, another 63. So good, decent gains there. Now we're back in positive equity. And I can now look to short 3 of these again. So if we get a dip back, I can exit them and then I can re-long. So I'm only going to get slight gains here, but it will be a little bit, well, probably more than enough for me to just remove one of these. And I'm not going to do that because the market is now climbing, it seems, with a bit of trajectory to the upside. And now we're falling, and we're going to rally again. So I'm going to add 2 of them. Okay. And I'm going to kill those off. 1, 2. Now price is looking weak down here, so I'm just going to remove that last long there just to tighten up in case we break the low. And if we break the low, I can now add a lot more because I've removed a lot of my long exposure that I was wrong on. So I'll add a 0.2, looking for a bigger jump. Probably would have liked it. I think it's going to be a bit sticky. So drawdown's not gone over $1,000 still. If you are just counting this, I mean, if you factor in the gains I've taken, it's never gone really below sort of, well, probably about $500 or something. So that 0.1 I've got in, I can just get rid of as a hedge gain there. And I think I'll just buy again, just because you're seeing a little bit of momentum. Bang, straight up, take a 0.1. And then I'll take another 0.1, I think, just for a 0.2. Now that is decent because what it's given us is hedge gains there. And it also looks like price is dipping and may rebound to the upside with a bit of momentum. Okay, there we go. Fantastic. So I'll take that off. I'll take 2 again, 2 shorts just to hedge those long trades. And if we pop again, I'm going to take that chance to remove some of that long exposure at the top. Okay, so we've got $90. It's $180 there. If we pop now from the 0.1, I'm going to remove my oldest trade. Okay, take that off. Take that one off. There you go. So remove that. Take a short just to hedge those 2 evenly. Take another short just to add again. Now I'm going to remove the longs and see if I can just get out everything flat here. Okay, I've actually added 2 shorts there. I didn't really want to do that. Okay, add another one there. And on a dip, I'm going to take a hedge long. Okay, so I'm going to hedge long 0.1. Take that off. Take that off. Now we're uptrending, so I'm going to take that off. I did have a long hiding in there. I could have taken gains on. Okay, so I'm going to add another long, and hopefully if we push up now, which we haven't, okay, I'll take another long. Okay, take that off. Take that one long. Short, sorry. That one for gains there. Another short. You know, we're trading a range 0.93, 0.86, so a fair amount. There is a trade in there. Okay, so we've been very risk averse here again. As I always say, you know, you can say, oh, well, you know, it's only $1,000. Yes, but I've had basically no drawdown and it's been incredibly easy. I've hardly even had to think about what I'm doing at any time. $40 there I'll take. Looks like we might trend up again, like I said before. So I'm going to take a light long. I'm going to remove that short. And on a pop, I can kill that one off. And I can... Okay, I'll leave that one. I'm just going to take a head short in case. It's tiny gains there. See if we can just worm our way through this. Okay, I'm going to remove it now and then take that one off. And it more or less adds up. So again, very, very low risk example, but basically no drawdown, maybe $300 or $400 at the most. Massive win rate as always, and net gains there. You know, you could scale it, like I said. You could have more assets and you'd be sitting with absolutely minimal drawdown and just printing money, basically. But yeah, you really need to get that. You know, if you're thinking, oh, well, it's only that, yes, but you could have done it with less capital and it would have been equivalent as a higher gain. But I took extremely low risk there and I had extremely low drawdown. But like I said, you could have had higher sizes and you would have made more money. It's as simple as that. You could have had more assets, you would have made more money. You just repeat the same methodology and same process. Thanks for watching. See you in the next one.